So welcome everybody. Happy to be here. We will talk about banks' strategies in the blockchain domain. This includes digital assets. It includes crypto assets in various forms, potentially also ETFs, custody topics, trading topics, and so on. That's what we would like to cover. And the main questions is concerning banks. Where are they going? We have multiple approaches out there. We have banks who are becoming first movers in this entire field. We also see banks just focusing on crypto. We see banks just focusing on digital securities. We also see banks taking a follower strategy, and all these various approaches we would like to cover today. With this, let's kick it off. And I would like to ask everyone here to very briefly present himself as a person, of course, but also as a company, because this then provides the background of what we discuss later on. Who wants to give it a start? Thomas?
Thank you, Philipp. Yes, certainly, no problem. My name is Thomas. I'm working for Metaco as a sales director for DACH and Central and Eastern Europe. Metaco is one of the leading custody solutions providers, so we're a tech provider. Our product is called Harmonize, can be used on-prem, can be used in a SaaS environment. And 6 out of the 10 largest traditional custodians worldwide are using our software solution. We have a large footprint in Germany and Asia, and of course, it's Switzerland. Company is Swiss-based. Yeah, and looking forward to the discussion with you. Robert.
Sure, thank you. Hi, I'm Robert Richter. I'm a director at Sandner. Personally, my background is initially banking and credit risk modeling. And then, as Philipp very well knows, started my blockchain career about 4 years ago when I started working at the Blockchain Center, and am now doing a PhD at the Technical University of Munich alongside the work. Sandner is a consultancy, but a boutique consultancy, so focused on corporate treasury and risk, specifically in the financial services sector. And when I say risk, I mean financial risk and non-financial risk. And within the company, I'm heading the financial risk team in Germany, as well as the blockchain initiative globally. Sasha, do you want to continue?
Yes, of course. Thank you, Robert. And hello, everybody. My name is Sasha. I'm head of digitization at eWpG Bank, which is basically a securities transaction service provider in Germany. We are Germany-based and only operate in Germany. VPNX, as you can see in my background, is one of our digital assets products, so to say, a platform for trading towards our 1,200 connected clients potentially. My background is basically in banking, corporate banking, and management consulting before I joined eWpG Bank to head the digitization department 2.5 years ago. Benjamin, would you like to proceed?
Thank you. My name is Benjamin Schaub. I'm managing partner at Inters, which is a consulting company specialized on blockchain technology. So we focus on the one hand side on the integration of crypto assets for financial institutions, could be banks interested in a crypto offering for its clients or asset managers trying to include crypto in their investable universe. And on the other hand side, we focus on the tokenization of traditional securities. So it could be equity, bonds, or fund units. And here, our services range from strategic assessment to infrastructure setup and then implementation. And then I guess, last but not least, Roberto, please.
Okay, hi, good afternoon, everybody, and thank you for the invitation to be here. So my name is Roberto Pagliari. I work at Commerzbank. I work in the Distributed Ledger Technology Innovation Lab, where we focus on capital markets and treasury use cases and solutions, as well as also some digital cash solutions on the wholesale side generally. That's
Excellent. Perfect. So let's get started. First of all, let's make some examples about what banks are doing in this entire field. What do you see, or what you also partly as banks, Roberto and Sasha, what are you doing? And also basically the others, what do you see what banks are doing? Let's maybe try to define some archetypes, how banks are typically behaving. Who wants to give it a start?
Sure, I can give it a go. So at Commerzbank, we are we're organized where we have crypto custody, and we recently announced our crypto custody license. We have a cash payment tool called Temis, which is like an e-money tokenized deposit system, and then we have this capital markets unit that I run, and we focus very much on topics that are really relevant for customers. So we're not, I would say, a massive pioneer throwing money left, right, and center, all sorts of things, but we are very careful and dedicated and fixed towards really what's interesting for our client base. And we have, for example, recently announced our participation in the Helvetia program, which is quite interesting because it allows us to experiment, or actually do real trades, in DVP transactions. We'll issue bonds and settle that with wholesale CBDC issued by the Swiss Central Bank. So that's a particularly interesting use cases because we're interested in the Swiss market. We have quite a decent footprint there. We look generally at other bond-related topics. So we follow very closely what's happening amongst the CSDs. So recently we conducted a DMAT transaction under eWpG with Clearstream. We're also keeping fairly close look at what's happening in generally in eWpG with the tokenized issuances on public blockchain, as well as whatever else is happening within traditional custody space and traditional issuer space. So yeah, so generally quite a wide array of scope, and we're looking at yeah, again, really what's relevant for on the client side. So more of a fast follower, and then specifically if there's something strategically of interest to us, then we would look more closely at it.
Yeah, one follow-up question here, Roberto. You as Commerzbank recently have gotten the crypto license, such that everybody knows it. It has been granted, right? And what's your plan with it? Is it focusing on digital securities? Is it a crypto asset, or both, or one of these two types? Maybe one word.
Currently, yeah. So currently, it's cryptocurrency. So Bitcoin, Ethereum use case for institutional clients. So it's quite let's say a slow and meaningful footstep into that. Yeah, that's the initial attack scope, I'd say. Looking further forward, I would expect there would be plans to build that out, but that roadmap's been worked on.
Perfect. Thanks. Who wants to go next? Maybe we do the banking round. Sasha, please.
Yes, sure, Philipp. I can do so. So as I pointed out in the introductions, we are a securities transaction bank, basically infrastructure provider for 1,300 banks. So basically we have a B2B2C business model. I think that's important when we talk about our product and our perspective on digital assets and crypto as a whole. So we started quite early. We have a product called FinLedger, which is basically a bonded loan, so bank-to-bank loan, based on blockchain. That was our first starting point, where we learned quite much. Interesting in our journey, I guess, is we started off with a perspective on efficiency. As an infrastructure provider, of course, stability, efficiency is quite important. So we started off how to look at how to use blockchain technology to reach that goal. However, when we looked at our major footprint, which is basically retail market clients at the end of our interface, so our customers, banks, Sparkassen, Volksbanken, private banks, MLP is one example of that, which is also a pilot client. What do they have to do, or what do they have to offer actually? And there it was quite interesting to see one of the archetypes, which is basically cryptocurrency, because we talk a lot about, of course, institutional products. We talk a lot about institutional adoption, but what we see, at least in the retail markets, the major interest and demand is currently coming from retail clients. And that's one of the facts, I guess, the first time in the financial market, retail clients are driving the adoption also for institutional, in our opinion, which is an interesting learning. Therefore, we started with our VPNX platform actually to see how to leverage our current value chain smoothly for our clients, so they don't have to do big integration projects, so they don't have to establish new outsourcings and so on, and enable their clients to get access to Bitcoin trading and Ethereum as a first step. I think that is something we are about to go live in the next couple of months, which is a basic footprint, because in our opinion, to be interested in the crypto space, and I think we all can agree, is a major commitment to new technology, which is not that easy in a banking environment to implement. Therefore, WPNX is for us our footprint to go also to other archetypes we touch base on, as Roberto, maybe digital assets, tokenized assets as a whole, and whatever the future will bring. So NFTs cooled down a bit, but was also a gamification use case. So that's what WPNX is about, starting with currency trading, but in our opinion, to have one stop for our clients as a marketplace, so to say, for all digital assets archetypes.
Yeah, excellent. So Thomas and Robert, what do you see in the field?
Yeah, it's quite interesting, Sasha. I learned a lot now. Happy to be in the panel. Our experience is a little bit different, and that's why I said it's so interesting what you said just, because that absolutely follows my personal opinion that I don't understand why so many banks do not offer cryptocurrencies and just, proprietary trading for their customers on the cryptocurrencies, because it's a riskless business and they can earn, some trading fees or whatever. But our clients, mainly, let's say my clients in the DACH area, very low interest or have very low interest in cryptocurrencies. They all go for the digital securities and aim the institutional markets or corporate markets in issuing corporate bonds and stuff like that. Like we saw in Germany with one big technology provider, that the bond worth 60 million was issued on the blockchain, which was a nice test. So that's the area we saw. It changed a little bit in the last weeks, but I don't know if this really is a sustainable trend, that there are additional players, but mostly fintechs are coming, who now want to, jump on that cryptocurrency train again. I think that, the market development of the cryptocurrencies did not make it easy for our customers, clients, banks, whatever. And the other topic with the AI is smashing in the news. So nobody's talking about blockchains and cryptos at the moment. So it's off the screens of the people. And even though there would be maybe nice, interesting investment opportunities, nobody's that interested as a year before. Yeah? A year ago, you all know it was completely different, and there was a real rush on it. So to sum my long words up, we see that at the moment the major banks, the big ones, also internationally, are focusing much more on digital securities than on cryptocurrencies. But I hope they change or enrich, enhance their portfolio. I know that all of them or most of them are also thinking in the second wave they want to provide exactly what you said, Sasha, services for retail clients to invest into cryptocurrencies.
Yeah, excellent points. Excellent points. Robert, what about you?
Yeah, maybe I can add my 2 cents to this. So I think a lot has already been said about banks going the crypto route or the digital assets route, or potentially both. When I look at the markets and the people we speak to, if we go one level higher, I would actually segment the market into 3 pieces. So the early adopters. And Roberto, I know you're being modest a little bit, calling Commerzbank a fast follower. I would still put you into the early adopter bucket. And then you see the sort of banks that do have a pretty good overview of what they want to do, but they are trying to assess when the right time is to enter. And you have the banks that are still figuring out what sort of area they want to go into. So figuring out the use case, precisely whether to go crypto or digital assets. Now, in the banking sector, of course, with my risk background, I see a lot of development happening. For example, with BCBS issuing a new standard on capital requirements and disclosure requirements. But that's still in the BCBS phase. It hasn't trickled down into the capital requirements, for example, within Germany or EU law. And quite interestingly, so For background, Sandner has been around for almost 30 years, and we have quite a strong track record in corporate treasury. So we're working with the large corporates that regularly access the financial markets, and their interest is also starting to rise into digital bond issuances. On the one hand, to start experimenting with it. On the other hand, some companies might be impacted by ESG requirements. So looking into alternative funding sources, be it peer-to-peer or just sort of marketing initiatives to sort of access funding. That's also a topic that's rising quite rapidly. And maybe later on we can talk about some alternatives that are popping up, like the SAP Currency Hub, but let's maybe park that for later.
Yeah, excellent. Then also we have Benjamin. What do you see in terms of where banks are going?
Well, so Robert covered the consulting perspective quite well. However, I also see three buckets mainly out there, but I'd say the financial institutions or banks that are already in crypto, they remain to be in crypto, and their next step is now to be compliant with MiCA. And that's more or less also what I would say on the security side. So companies that already opted for a tokenization use case, they will go ahead here, because if you start and then you implement, you might have to go for a license. This takes a couple of years, right? So the banks or asset managers who already decided, they will go ahead. But I think important on the crypto side definitely is that MiCA is upcoming, and this will probably also take them a year or two to comply here, because it's still a lot to consider, even though it's financial institutions and they comply already to most of it in the security space. So their book of work is full, I would say, but still there are a lot of banks, financial institutions in between those groups, trying to decide, like Robert described, what to do and when to do. And I believe this decision is now becoming a bit more difficult. As Thomas stated, there's a bit more momentum now for crypto than maybe in the last year or 1.5 years. And there are definitely some institutions now trying to decide what to do next year and the following year. And for them, I believe, from what I at least observe, is they are a bit struggling with which use case to start, because it's, as always, either you go down the crypto or the securities route. It's very tough to tell what it means from a business case perspective. So here I see difficulties, but in general, I think there's more budget available for blockchain projects in general.
Yeah, so that
I think.
Please, Thomas, please proceed.
I just wanted to connect onto Benjamin's elaborations. I think the MiCA is playing a big role because it's regulating the crypto space quite well for a large community for whole of Europe. As you always always say, for 440 million people, there is a regulation which is unique on the world at the moment. And I think this gives a push because the strategist people in the banks start thinking about that everybody in the European Union could offer any service concerning cryptos anywhere in the European Union. And if you don't do anything right now, maybe in 1 year, somebody from Hungary, Czech Republic, whatever country will offer an European-wide crypto exchange or crypto, trading services or crypto wallets.
Take Bitpanda, right? Take Bitpanda. Bitpanda coming from Austria, having now the German license. That's a good example. Or also Börse Stuttgart, starting from Germany and exploring potentially other European countries. Yeah.
Yeah, but Bitpanda has the licenses in different countries. They have a huge argument at the moment selling their white label solution because they sell it including the license. So they're selling BPO and not only technical services. This advantage will vanish by the end of the year when somebody else can do it with one license in one country and have the passporting with the MiCA regulation. So I think that's might be the case where it gives a little push to the whole industry doing something and exploring something.
One second. I have to announce the chapters which we are following in this panel discussion. We are now in the crypto assets chapters. Thomas has just started with this. We would now like to explore crypto assets, and then later on, in a couple of minutes, we then jump towards digital securities, just providing a little bit of structure. But let's proceed now with crypto assets. You mentioned Mika. How are the others seeing it? Is Mika creating some kind of driving moment, some kind of driving force, such that others are also joining the crypto assets domain, right? Or are there banks out there who are totally ignoring crypto, which could also be possible? Who wants to give this question a chance?
So my view on Mika. So Mika, of course, delivers that EU harmonization of the rules, but also to be compliant with Mika has a cost with it, and it has obligations with it, and that has the impact of potentially shaking out less serious actors or diversifying out weak hands, which means that you generate or you create more credibility in that space. So that gives the C-suite and the banks the let's say more comfort with the idea of crypto, and then eventually also DeFi mechanisms. So being able to take part, well, potentially use DeFi mechanisms such as staking in the future once you've established crypto custody and trading or whatever else. You could have that comfort in bringing those mechanisms into the mainstream. That's what I see from my point of view. And then we're also seeing comfort with other DeFi mechanisms such as automated market makers. We saw with Project Mariana, the eCrona experiments used a DeFi component to calculate interest on CBDCs. We saw the experiment with Societe Generale Forge with the covered bond refinancing using the DAI stable token, so stablecoin. So I think that's my view on Mika. So it adds credibility, brings more seriousness to the whole market, and comfort for the C-suite to start to operate in this space.
I think you mentioned quite an important point, the C-suite perspective on the topic, because I think Mika is a good start, and I totally agree that regulation brings more comfort also to decision makers, especially in a banking environment. However, what I would like to add is still, because of the interest rate change in the recent months, I guess traditional revenue streams are also interesting. Still, when we talk about C-suite adoption, and to be honest, there's no mandate for most C-suite members to adopt crypto at the moment because they are incentivized quite differently. Still, what my statement is, I think that will be also a big driver of adoption when we have not only Mika but also this incentivized actions from C-suite decision makers. Because as Philipp pointed out, what we see is a lot of interest in that space, in that domain. However, then moving forward with projects and connections and offering crypto is still hesitant. And on the other side, we see a lot of banks ignoring crypto completely and rooting for things like digital euro, for example, which is an important point. So my statement is, I guess education was a big part in the last 2 years. However, the competition with traditional value streams and the trade-off between traditional revenue streams and offering new products is still a C-suite topic going forward, which will drive adoption positively or negatively, in my opinion.
Yeah, good point. Let's turn toward custody, because that's a very crucial aspect here, right? Banks can...
Philipp, sorry to interrupt.
Yes,
before we jump to crypto custody, may I pose a question?
Of course.
Wonderful, thank you. So potentially specifically going out to Sasha and Roberto. I mean, again, from the risk perspective, right, we have new capital requirements coming in, and holding crypto as a bank will be very, very expensive. So you see a lot of things moving into custody. I'm guessing Thomas has a good view on that. Yeah, maybe a slightly loaded question, but were there any business models or use cases that you looked into that are now no longer viable because of the high capital requirements?
Well, certainly holding anything on the balance sheet is out of the question at the moment, given those capital requirements. Unfortunately, I'm not aware of specific use cases we were looking at where that was going to become needed. Apart from my own ideas around, settling a crypto bond in some kind of Bitcoin or something like that on a temporary basis. But yeah, on my side, I don't know. Maybe Sasha's got something on his side.
No, actually, nothing to add. Quite perfectly outlined. I totally agree what you said, Roberto.
Okay, fine with the answer, Robert. Should we proceed? Perfect.
Thank you.
Yeah, so let's turn toward custody, right? Banks can build their own custody, banks can purchase their custody services from vendors, and of course, banks can outsource custody services to some degree. What's the typical mode here? What are banks doing? What are banks trying to avoid here? Who wants to give the question a start? Maybe Benjamin.
So I think important here is, again, for me personally or for us MiCA, because might be a bit oversimplified, but we don't have a lawyer in this round. So MiCA basically allows whatever you do currently in the securities field. And this also then applies around the field of custody, basically, in particular crypto custody. So what we see is maybe newly born interest into crypto custody, because with MiCA now it becomes more plannable. We have a defined time frame of how fast regulators need to respond to inquiries. And as we have observed in the German market, especially, this was a big pain. There were some companies waiting for, I believe, 3 years or even longer to get their crypto custody license from BaFin. And I think MiCA now changes this. It's more plannable, also important for the business case. And I would expect from our conversations we have that we will see more banks in the European sector opting for crypto custody, but it will be like it is today. So I think only the bigger ones will really implement it on their end, and the rest of it, smaller banks that will try to offer crypto will outsource it to a tech provider or maybe to another financial institutions. But I think in general, interested or what Thomas thinks here, that we will see more competition here, not only in Germany, but in the whole European Union.
Yeah, Thomas.
Thank you. Catch the ball. If you look back, a lot of years when all this crypto thing started, and that's where most of the current exchanges and big crypto natives have been born and founded, there was no solution you could buy, right? So all of these exchanges, or the majority of these big endeavors and quite successful companies have self-made solutions. So we're talking about make, not build, really make. By the way, brackets open. I don't know if this is really secure, brackets closed. And in the last couple of years, there have been, quite some providers for tech solutions. But if you want to realistically count, let's say at least for broader Europe, let's say it in that way. I'm not so familiar with the US market, but broader Europe and including even Africa and Asia, there are not so many providers for that. That's from the technical point of view. But I think what is really interesting is from the organizational point of view. Do you do self-custody and offer to run the whole technology stack on your own as a bank? Or do you want to go for sub-custody and give this business processes to somebody else? Like it is commonly used in the traditional instruments. You would not do custody for US stocks, for instance. You would have a partner bank in the United States and they do it for you. And that's the same case, more or less, which we also see in the let's say, digital asset space, crypto space. We cannot, from our perspective and from our experience, say that the big ones do this and the small ones do that. The big ones definitely go for more for self-custody. And even there, the majority goes for on-prem solutions because they have huge IT departments. They're used to the technologies. Basically, it's just a new piece of software, but basically from the key management systems, they are used to the technical instances which are used there. And yes, the majority of smaller companies are going for SaaS models, but they do self-custody. So technology-wise, they outsource the technology, but they do it legally on their own. And only a few do a sub-custody. Some of them maybe coming back to the C-suite. You brought in Sasha, I think, because it's very hard to convince the management and the board to do quite an amount of capex and invest something where you don't know what the outcome is, and if you in the management incentivized the profit of the company, you avoid capex and you rather go to opex, and that's what they do with sub-custody. But let me finish with this. I think it's not that wise idea to just charge it on capex and opex, and maybe not really, having all business models and use cases where you can earn money in the future. I think it also has something to do with reputation. And we know that for banks, the reputational risk is one of the biggest, which is very hard to judge and to evaluate. But if you do sub-custody, or if you use sub-custody, you're still responsible towards your clients. So if your bank to which you do the sub-custody, which does the processes for you as a bank, has a problem, you have a problem as the one who is consuming that sub-custody service. Yeah. And the second thing is that we saw that it's not always so easy. We had a case, and it's very contradictory to all what everybody would assume. It's a very small bank. It's a small bank in Liechtenstein. They used sub-custody and they changed to self-custody in a SaaS model with our solution, and even a SaaS HSM. And after that, they were completely astonished that they need only a third of the people and resources than they had need before in the sub-custody operating model.
Yeah, so it really varies. Yeah.
Yeah.
Robert, I think you also wanted to mention a point here on this custody topic.
Yes, a question actually towards Thomas. So if I look at the sort of value chains of a number of banks, what you often see is that ultimately you have one custodian involved in the entire value chain, whoever the client is. And so you end up in a situation where you don't actually have transactions on the blockchain anymore, but the custodian is just reallocating coins from player 1 to player B to player C, for example. So again, the risk person in me says, are we currently in a situation where we're facing concentration risk around the custodians?
I don't see that. I think I don't see that. No. The majority of clients we saw, they will start with omnibus accounts where you can do that, what you just said. But on the other hand, it's very sensitive because of the timing. Yeah? If client A sells, let's say, 20 Bitcoins, but B is just buying 10, what do you do with the other 10? Yeah? Keeping it on your own book, then you have enormous capital requirements instantly. Waiting and sit is an exposure in these volatile markets. I would not do that either. So you have to bring the difference of these transactions immediately to the market. Otherwise, the risks are high. And what we also see is that almost every bank is looking for segregated accounts to be offered to their clients rather soon. the only thing what they prohibits them to do it at the moment is if you have segregated accounts, you automatically have to have AML and KYC processes, and that on the blockchain, and nobody wants to do that at the beginning. That's why they don't opt for segregated accounts from the start. But I don't think that we have a concentration at the moment.
Okay. Last aspect about crypto assets, then we move over to digital securities. Sasha, when we discussed the storyline for today, you mentioned the focus of clients is also interesting. Is it retail clients? Is it professional clients? Is it whatever institutional clients? What's your opinion here? Where are banks going? Where are banks starting?
Actually, banks are covered quite well, in my opinion, in our discussion yet. I think, as Thomas pointed out, of course, we look at the retail market because our significant load is on the retail perspective, and most of our trades are on the retail side. I totally agree that there's a lot of activity also in the institutional side around securities, but Thomas put it quite perfectly. We see a lot of testing. In my opinion, it's not yet there completely because we have a lot of good regulation. However, to build it and implement standards, risk management, internal controls, and so on, I think that's a major obstacle. I think a lot of banks came up with good solutions. However, the regulator has not commented on these solutions and has a standard for it. I think that is a big point when we talk about adoption and about significant transactions. Therefore, switching to the retail side, we see at least that the traditional investor now is open to invest into Bitcoin. I think, and I'm sure you're more up to date, Philipp, than me. Around 13% are invested in Bitcoin already. What we see is that it's a savings plan game as well for interested retail clients, and there's a demand, in our opinion. Therefore, we start with Bitcoin. But I totally agree with Thomas. I think when you look at the end game, everybody is interested in to handle whatever will come in the next years, and we don't know what will come. We see, and that's maybe a good bridge to the security side. We looking at the digital security side quite intensively as well. However, that is a following topic once we have established our technical backbone. And the tech stack, in our opinion, as an infrastructure provider, is a really important topic here as well, to put all three perspectives, retail, institutional, and our own perspective in, to sum it up there.
Yeah, excellent. Before we jump over to digital securities, there has been one question coming from the audience. The question is actually, I can't answer the question myself. The question would be whether MiCA also applies to tokenized deposits, right? We know that MiCA, of course, applies to stablecoins, yes. But what about tokenized deposits? Is anybody knowing an answer here?
Yeah, so I hope not. So I think when we talk about deposit tokenization, we're talking about basically a new technical form of an existing form of money. So the hope is that it will be recognized as deposits as per existing deposit regulations. So but that's yet to be determined. So some other jurisdictions have already kind of given the green flag. So in the UK, for example, the Prudential Regulatory Authority have effectively said yes, they recognized tokenized deposits as, and that's non-bearer tokenized deposits.
But it's a question which needs to be discussed with the regulator, because, you know, from a custody perspective, it would make sense to also let the custody rules of MiCA apply to tokenized deposits, right? But that's maybe something for another panel discussion. Let's move over to digital securities. And again, the same question would now be, what are banks doing on the tokenization of asset side? And do you think that banks should be more active in the role of issuing, managing, and potentially also trading digital assets? Who wants to give it a start? Benjamin, would you like to get started?
Sure, I try to make it brief. So I think, as we have observed in the crypto space and in the establishment of crypto custody, building up the tech stack or including it in the own infrastructure is the biggest piece. And it's more or less the same for tokenized securities. Here, of course, we have the custody part as well we need to cover. So this infrastructure needs to be there, but also the new infrastructure here we are talking about is the crypto securities registry. So the registry keeping for tokenized assets. And here Germany is definitely a bit ahead of the curve, we can say. So there's a regulatory regime out there. You have to apply for a license here as well, which, as we know, takes time and it's effort, and you need budget for that. But we see first players emerging here. So in general, I would say we will see more competition when we talk about the services traditional central securities depositories performed earlier. But this will take time, probably 2 or 3 more years, but we will see more players providing this security registries, and this will then help pretty much with everything else around the tokenized securities. So the settlement, the trading piece, and so on. Also, we need to keep in mind that we have the DLT pilot regime, although there's, I believe, no active player so far. From what we hear is that we will see the first active players at the beginning of next year, so licensed somewhere in the European Union. So this settlement, custody, and trading piece around tokenized securities, we will see more frequent, and we will see it in a split value chain compared to the traditional world. So new players providing services they were not allowed earlier. And then probably we will see a bundling of services again, like the DLT pilot regime outlines. So the trading and settlement as one role basically in the market for the first time.
Who wants to add something here?
Yeah, I think I like what Benjamin said there. I think should banks focus more on taking an active role in issuing and managing? Definitely. So, and there's 2 aspects here. One is in order to participate, of course, you need to understand how these securities can be settled, how they behave, how you book them. So there is understanding the technology, and also how to exploit some of the potential benefits. So what's the impact on reconciliations? What's the impact on liquidity management and so on? And you need to understand that end to end. So understanding the ecosystem and how it behaves, and just on the point of liquidity management, that's quite interesting, because when you get into the trading world, whenever it comes, to have the money in place to do atomic settlement needs to be done in a relatively smart and fast way when you're combining that settlement and payment aspect. So understanding how to adapt, build systems to process these bonds is absolutely key end to end. The other aspect actually is being involved is also a way to kind of understand, well, how's this market evolving? So who's doing what? And to Benjamin's point, there's a potential risk of value migration away from the banks. So what are the CSD doing? They're doing the central securities depositories. They're building tokenization platforms. You have the traditional custodians also building their digital asset platforms, BNP, HSBC, Goldman Sachs. And then you also have these new entrants in Germany, especially with the crypto registrar. So there's a lot happening there. And there's a risk to banks that, it's the traditional business which they've been making the money from over the past years is subject to some value migration away to these other parties. So that's important.
Interesting point. Who wants to add something on the digital security side? Maybe we focus on the next question. What do you see coming here in the next 12 months?
I've got a question there that sort of ties in with this. So it ties in with both topics here. For background, I'm currently writing an article on a specific part of the BCBS standard, which is infrastructure risk add-on. And as part of my discussions, I've sort of come across 2 very opposing views, and I would be interested to hear from Roberto, Sasha, Benjamin, and also you, Thomas, where you see this going. Because a lot of, some people say the banks that have built their own solutions will stick with those solutions, and we're going to see essentially a network of networks happening. Others, however, say, well, then we just end up in the situation that we're currently in. So really, we should go public. How do you see this?
Yeah, this adds on to the question about what's happening in the next 12 months. Yeah.
I mean, the thing you just discovered when I got it right is the situation of networks, so private permitted blockchains, and then some interfaces to other private networks. That's what you mentioned.
Yeah.
We had a very good discussion exactly about that point, and it was at the Digital Asset Week in London. There was a guy from a very huge US bank, and they said, as long as they cannot guarantee that the validator is not sitting in a sanctioned country, they cannot participate on the public blockchain, period. And if you take this for granted, then all the US banks are out of the public game because you cannot validate at the moment. So that the blockchains have to develop and maybe have a kind of blacklist, whitelist system for validators as well. But then the question comes, who is maintaining that list?
Yeah, that's a very interesting point, Thomas, because the EU regulators found solutions for this, or for them it's basically okay, right? So we see a very wide variety in opinions here between the US and the EU. Okay, what else will be happening in the next 12 months? What do you see?
Maybe my last sentence, I'm talking a lot, I know, but I think a standardization and the smart contracts and the products, because if there's no standardization, you cannot do straight-through processing. I mean, you would have two bonds on the blockchain, but they look completely different. The smart contracts are completely different, and there's no efficiency gain. It's just another technology, and it's one big, ledger system and not 10 different ledger systems or whatever, 100. I think the standardization is one of the things which has to come. Otherwise, the whole thing with digital assets doesn't make any sense.
I think
I'm not saying that it is coming. I'm saying it has to come. Yeah, don't get me wrong.
Roberto.
So I think for the next 12 months on the bond scene, I think we're going to see a lot of the same. So I think we're going to see more issuances. We had the World Bank doing issuance recently, eIB, so on. So I think we're going to see more of that. So more learning. I mean, until you have a secondary market, the ability to trade the secondary market, I don't think we're going to see massive scale in this, right? Certainly outside of Europe, because inside Europe, because we have the EU pilot regime to contend with. So yeah, so I think it will be continued real transactions and continued learning from the banks and issuers especially as well.
Perfect. Anybody wants to add something? Otherwise, we are closing this round. I think the next 12 months will be very, very exciting for both sides, the crypto assets domain, actually three assets, right? The crypto assets, digital securities, and also the digital euro, including the stablecoins, right? It's three domains which are more and more independently developing. I think that's going to be very, very interesting to observe what's going on here. Lots of new initiatives taking place. So 2024 should be exciting here. Anybody wants to add something to close it down, our very, very interesting panel today?
Yeah, I hope we'll see more movement on the cash side, on the cash settlement side. So there's some really interesting projects. So hopefully we'll come live already starting next year and then into next year. I don't know if I can mention specific projects, but there's obviously the finality system and then there's the commercial bank money token exercise that's happening between some German banks and corporate clients. So that's very interesting work that we expect to see some results from in the next 12 months.
Excellent. So that was a very interesting round. Was a little bit of an outlook. Where are we going? What archetypes of banks are existing, and where will we go next year? Thanks very much. And yeah, let's close it down at this point of time. Thanks for having you all, and have a wonderful day.
Thank you.
Thank you, Philipp. Thank you.
Bye-bye.
Thank you very much.
Bye.
Thank you a lot. Bye-bye.